Hi everybody, this is Osprey from mychartcoach.com, and in this video we're going to take a look at the different sectors through the spider. Through the different spiders, through the different trading vehicles. And so first up we're going to look at XLP. This is the Consumer Staples Select Sector Spider Fund. And so this is the strongest of the different sectors right now. As you can see, it's in a very strong uptrend. It's going to have to get through 70 on RSI. You can see it tops out at 70, so it's getting pretty frothy up here. You do have Fasto up here at 94, and so it's been pushing pretty hard. And also, you can see here with plus DI, it is hitting some elevated levels, but it has pushed higher in the past. It has a super strong uptrend right now. Check out how the candles are just riding EMA4 support higher. As long as EMA4 at 56.44 is holding, the signals to keep riding. Once it closes below, it could pull back, and the chart would still be strong as long as the middle Bollinger Band down here at 54.86 and the 50-day simple moving average at 54.30 continue holding. So yeah, really strong uptrend for the consumer staples. Now let's look at the utilities. So the utilities have been doing well also, and so as you can see here at 57 on RSI, 76 on Fasto. Right now on the chart, it's hitting this key resistance level between 55 and 55.25, and you can see here the high close here on the the 24th of October is going to be the big level to break. If it can bust above this 55.25 resistance zone, then it could keep pushing higher. If it turns into a temporary top, it's likely to come back down and test that middle Bollinger Band at 54. But compared to the other sectors that we're getting ready to look at, the utilities are looking really good. So we have utilities and consumer staples looking the best. And then let's look at healthcare. So these are all the defensive sectors. The defensive sectors are doing the best. There's been a big sector rotation out of technology and into these defensive sectors. And you have the healthcare sector has been really heating up. You have RSI here at 58, and it's in the bull zone with room to run. Fasto just had that bearish crossover. You want to see it stay above 80. You want to see plus DI here on ADX, the green line, cross above the black line to the upside. And so right now, there's been a close, 3 closes in a row above the 50-day simple moving average at 92.19. As long as this green line holds, it can keep pushing higher. You're looking for a retrace back up to this 95.50 high close resistance level from the first trading day in October. Now, if it were to drop below that 50-day simple moving average, then it could come down, test the middle Bollinger Band down here at 90 and fill this gap. So it's going to be real important that it stays above 92. But yeah, still the healthcare sector is looking strong. Okay, let's look at the retail sector. There's multiple stocks in the retail sector that are going to be reporting earnings this week, including Walmart. It's going to be a huge week for the retail sector. So we got to take a look at XRT here, and so yeah, it's in the bull zone here on both RSI and Fasto. So at 52 there's room to run, and they both just need to stay above 50. You want to see Fasto get back above 80 to signal the chart's super strong and pushing. You do not want to see the green line cross over the red line to the downside here. You want to see the green line actually cross over the black line to the upside. The green line's plus DI, the black line's ADX. You want to see green above black. The red line's minus DI. You want to see that stay below both the other two lines. Okay, now on Friday, a bearish reversal pattern did form, the bearish one black crow. This pattern formed across several sectors on Friday, and so it is a red flag. As you can see, the healthcare sector came up to the green line here, the 50-day simple moving average, and it closed above when tested. You can see right here, closed above. Now look at XRT. It came up and hit it closed above also the green line on Thursday, but it hit the 100-day simple moving average here at 49.69, and it dropped back below the 50-day simple moving average at 49.28. So these are going to be the two levels to break next week. So if Walmart and all these other retail sector stocks have good earnings and everything goes great next week, then the green and the gold lines should turn into support. It should be able to break above and start trading at 49.75 and higher. That's going to be your signal that it wants to keep pushing higher. If this 49, 25 to 49.75 level remains resistance, it's going to signal downside risk, and you could see the candles come down here and test that 200-day simple moving average and middle Bollinger Band. That would be be the downside risk. You know, what you want to see here is this EMA 8 at 48.51 hold, that 48.50 level, and then a push back above 49.75. Okay, let's look at XLY here. This is the consumer discretionary select spider. And yeah, so if you check it out, it had the same pattern. It came up and hit the 50 and 100-day simple moving averages and pulled back. It also formed the bearish one black crow reversal pattern. Okay, so both those sectors are going to be on bearish reversal confirmation outlook, or on lookout next week. And so right now there was a close below EMA 4, signaling more downside risk at 110.13. If that level were to turn into resistance, you could see it come down here to EMA 8 down here at 109, and then fill the gap between Tuesday and Wednesday of last week. That would be the downside risk. You know, a downward gap fill many times is a setup for a technical bounce, so you'd be looking for a bounce off of that level. As long as the middle Bollinger Band and 200-day simple moving average at 108 are holding, it can get a new uptrend going. It just has to break this 112 resistance level. It has to turn the gold and the green lines into support. Okay, let's look at the industrial select spider. Yeah, so this is the industrials. They pulled back as well, down 1%. As you can see, it couldn't get above 50 on RSI. It needs to get above 50. It has to stay above 80 on Fasto, or else it would be signaling that it was cooling down. So the industrials are in the process of starting a new uptrend. There was a bearish Harami cross reversal pattern did form on Thursday, and so keep in mind during an uptrend when a doji candlestick forms, that's where the open and the close are at the same level. Many times it does signal downside risk, and that's what happened here. It did pull back. This gap over here, you know, that was filled on this candle on the pullback, and so now you're dealing with this bottom of the gap support level. You just really, what the main thing that you want to be concerned with is this middle Bollinger Band here at 71.76. You want to see it stay above that level. As long as the 71.75 zone is holding, a new uptrend can begin. Now it's going to have to break above the 300-day simple moving average at 73.81 to head higher. That's the big resistance level above. You could see here the 50, 100, and 200-day simple moving averages are all stacked up as well. So you have 4 major moving averages just all lined up right above. So it's going to be holding support and then getting through these major moving averages. Once above 75.50, above the 50-day simple moving average, that's when the industrials can get pushing higher again. Now, if it were to drop below 71.75 next week, and this middle Bollinger Band and the black line, the 400-day simple moving average, turn into resistance, that would signal downside risk. The last time that happened and the candles were above the dotted purple line, which is the middle Bollinger Band, and then they closed below, like here on October 9th, that signaled the start of a big downtrend. So that's the downside risk here. If it closed below 71.75, it could come back down and test support. Okay, let's look at XLB here. This is the materials select spider. So it was down as well. You want to see RSI stay above 50 here. It's at 52. That's going to be important. Stay above 80 on Fasto. Why I say that is because look what happens when it goes below, once trading above, and then check out the pullback that follows. So in order to stay bullish, it's gotta hold that level. It's going to be a clue that you'll be able to easily identify if it starts trading below 80 on Fasto next week. That's going to be your signal. Okay, it's pulling back, it's cooling down. If it's back below 50 on RSI, like right here, you can see how that was deadly to be holding, because look what happened. It just kept dropping. And so those are sell signals, you know. So just keep that in mind. Also on ADX here, if that green line were to drop below that red line, that would be a sell signal as well. Right now, the materials sector are in the process of starting a new uptrend. They've been holding this middle Bollinger Band for multiple candles. As long as it's holding down here at 53.26, the uptrend can continue. It is in an uptrend right now. It did close below EMA 4. That was a red flag. Now the bearish descending hawk reversal pattern. Okay, this pattern was confirmed on Friday, and so that is a red flag. You can see how the pattern formed right here, and then the next day a red candle formed, and so that does signal more downside risk. So it's going to be real important it gets back above this 55.14 level, back above EMA 4. If it were to drop below EMA 8 at 54.56, it could come down there and test middle Bollinger Band support. Keep in mind it has to hold that level to head higher. And then also to the upside, okay, so let's say it's back above EMA 4, it's looking strong on Monday. What you're looking for is a break back above the green line, the 50-day simple moving average at 56.30, and above the 400-day simple moving average at 56.59. Once both those levels turns back into support, it'll be a clear signal the bulls have taken control. Okay, let's look at XLF here. This is the financials. Okay, so the financials are still above 50 on our side. A lot of people are banking on the financials right now, so they need to stay above 50 to remain bullish. Keep an eye on Fasto. Like I said, you don't want to see it dropping below 80, like right here, and then the big pullback. And so, yeah, this has started a new uptrend. You can see back here on the November 5th, there was a close above the middle Bollinger Band down here at 2638 zone. As long as that level holds, the uptrend can continue. Once again, notice how the moving averages are stacked above. You have the 50, the 100, and 200-day simple moving averages all stacked up. And also, yeah, it did close below the blue line, which is the 300-day simple moving average. So all four major moving averages are lined up above. And when that happens, it's the top moving average that needs to turn into support. So right now, it's all about getting above that red line, that 200-day simple moving average, and turning into support. Look what happened last time. It came up and tried to break that level after closing below. Okay, so it drops below, comes back up, and then it fails to hold that top moving average, and that's a signal that it pulls back. So we have the same kind of setup right now where it's hitting those levels. It's going to have to get above the top one, which is 2764, turn it into support so it can head higher. If it turns into resistance, you're going to see that middle Bollinger Band retested. A bearish one black crow also formed for XLF here, and so the financials are at risk of bearish reversal confirmation next week. So keep an eye out for that. You know, everybody is thinking the financials are going to do good with the rising interest rates. So we'll see how that plays out. People were wrong on the banks for the entire year last year. Okay, so far this year, people have been wrong all year. We'll see. You know, now it's heating up, and it looks like people are starting to get it right. We'll see. I mean, I guess it did have a nice sideways action. It's just they really haven't done much. So we'll just see. Maybe next year will be the financials year. Okay, let's look here at XLE here. This is the Energy Select Spider. And so, yeah, Energy is looking, this is one of the most bearish looking, I guess it would be the most bearish of the ones that we just checked out. You notice how you have RSI at 42, so it's below 50. Fasto is trying to heat up here. It's in the bull zone. You have plus DI, it's ticking down, and you have minus DI ticking up. You want it to be the opposite of that. So it did close above the open on Friday, and so that was bullish. And you do have oil with futures trading here. Crude, I believe, is up. I guess it's only up. It's up 1%. Yeah, it's about up 1% right now, and so we're going to be looking for a possible oil dead cat bounce next week. So if that happens, then the Energy Select Spider XLE should heat up. And keep in mind, these are all options trades. This is all about trading the options. And so if this level here, the middle Bollinger Band, remains resistance next week at 69, that's going to signal more downside risk. It has to get above that level and the black line, which is the 400-day simple moving average, in order to head higher. Right now, it's below EMAs 4, 8, and 13, and that's a clear signal that the bears are still in control. The downtrend started back here on this close below the dotted purple line, and you notice here it closed above the dotted purple line last week, but that level failed to hold. Until that middle Bollinger Band turns into support, it cannot start a new uptrend. So keep that in mind. All right, thanks a lot for viewing this video. If you'd like to learn more about charts and technical analysis, please come check out the chat. And for XLE, it had no pattern. The last pattern was bullish. It looked like a bearish one black crow here, but because that was a small white candle, it did not form. So it's just all about turning that middle Bollinger Band into support. All right, thanks for viewing the video. It looks like the market's trying to get a little technical bounce here. We'll see if the futures can hold up and lead into something on Monday. All right, thank you.